So in this question, we're going to prepare a multiple step income statement. So the unique thing in this question is they want us to make some adjusting journal entries before we put the income statement together. So we'll just do this step. Usually most questions will just have you put the income statement together from the adjusted trial balance. So we're working from the unadjusted trial balance right now. So my first journal entry is to record the accrual of sales salaries. So the salaries were $3,200. So I'll do salaries expense for $3,200, and then I'll do salaries payable for $3,200. And what I'm going to do here is just update my trial balance. So my salaries expense, instead of being $94,000, because I put that entry through, it's going to be $97,200. Now my next journal entry is record the selling expenses incurred for the year. So I have prepaid selling expenses of $5,200. So I'll say other selling expenses, $5,200, and then decrease my prepaid selling expenses for $5,200. And now I'll update my trial balance as well. So my other selling expenses are now $70,000 plus $5,200. And that comes out to $75,200. And my prepaid selling expenses, I have to subtract $5,200 from that. Where'd my thing go? So that will make this $2,800. And I forgot to actually update the salaries payable, so that one should also now be $3,200 with that first adjustment. So I'll record that journal entry, and now I need to record the depreciation expense for the year, and that's $2,500. So let's see here. Depreciation expense, $2,500, and accumulated depreciation, $2,500. And I'll just update my trial balance as well. So let me see here. I'm just looking for depreciation expense. And there isn't one yet, so I'll just write this in here. Depreciation expense. And that is $2,500. And then my accumulated depreciation is, if it was originally $9,800 and we add $2,500 to that, then now that's $12,300. So when we go ahead and do our income statement, all we're doing is recording our sales and our expenses. So you don't record everything on the trial balance. So I'm just going to color code this before I actually go to preparing my income statement. So I'll take my sales, and those are going to go under one category. So they're usually called net sales. And then we separate our cost of goods sold into a different category, and then that's going to give us our gross margin. And then we list all of our other expenses. So that's my salaries expense, my utilities expense, my other selling expense, and my other admin expenses. So all of those will go on the income statement under different categories. Oh, and my depreciation expense. And the rest of the information goes on the balance sheet. So that's why I didn't highlight them. Okay, so now I'm going to put together my balance sheet. And, or not my balance sheet, my income statement. So we have our name of our company. The type of income statement is a multiple step income statement. You guys have prepared a single step income statement before. And the title is for the year ended, whatever period you're in. So this is for December 31st, 2020. So I'll start with my sales. And I'll take the amount from here, which is 858,000. So once you use it in the income statement, you don't use it again. So that account now has been resolved. And now we subtract from our sales returns and allowances. And in this case, they're 33. And I should say less here. And then we also subtract our sales discounts. And they're the 8,000 right there. So now what we have is, I want to subtotal these two. I don't know why I know why I added that up, because I put an extra 0 there. So our sales discounts are 8,000. So just check the math on that. So all that's doing is doing a subtotal for us for the 33,000 and the 800, and that's correct. So when we subtract the 41,000 from the 858, our net sales are going to be the difference, which is 817,000. Now what I want to do is subtract the cost of goods sold. And I have the cost of goods sold at 431. So then my gross profit, that's what we call it, is the difference between your net sales minus your cost of goods sold. So the gross profit is 386,000. So now all I have left is my selling expenses. So I'm just going to put these in order of the highest amount to the lowest. And again, in real life, we usually just do it alphabetically. So I'm going to have my sales salaries expense. And that was my 97,200. Then I'm going to put down my other selling expenses. And that is the 75,200. Then I'll record my utilities expense. And that is the 12,600. And then last but not least, I think I'm going to put down my depreciation. And that is 2,500. So basically, I excluded recording the other administrative expenses for the 190 because it looks like on this income statement, what they're doing is separating your selling expenses from your administrative expenses, which is fine. So I'm going to add these up. So make sure that this total is the sum of all of these amounts. And then I'll separate my administrative expenses. So you might want to just make a note of that. So I'm expecting that all of the multiple step income statements that I do will separate the selling from the admin. So I'll say other administrative expenses, and that's 190. So then this total here, which is total operating expenses, is adding together the selling and admin. So that's why it equals the 377,500. So now we compare this to the gross profit. And we want the gross profit to be higher, because then that means that we have enough left over after we sell our product and what we paid for it to pay all of our selling and all of our admin expenses. So this will be our profit. If it was negative, if we had more operating expenses than gross profit, then we would be at a loss. So if you take the 386,000 minus this 377,500, you get a profit of 8,500. And now the next step is calculating the gross margin. So it says assume that for the year ended December 31st, 2019, net sales were $600,000, operating expenses were $344,000, and there was a loss of $14,000. Calculate the company's profit ratios for 2019 and 2020. So this one was 2020. So all I need to do is when you're calculating gross profit, so just a reminder, the gross profit percentage, or sometimes we call this the gross margin percentage as well, is take your gross profit and divide that by your net sales. So in this case, our gross profit for 2020 is 386, and divide that by your net sales of 817. So I'm just taking that straight off of my income statement. And that gives me 47 I'll round it to 2 decimal places, percentage, 47.25 percentage. So if you do 386 divided by 817, it's going to give you 0.4725. And then if you just multiply that by 100, that'll give you it as a percentage. So I'll put that number in, 47.25. $47.25. Let's see, 47.25. Perfect. So now what I have to do is they gave me enough information to calculate the gross profit for 2019. So I'll just do it right here. Okay, so for 2019, they gave me my net sales. So I'll just put together a quick income statement of 600,000 and then minus your cost of goods sold. So I just call this COGS. That will give us our gross margin or our gross profit. And then if we minus our operating expenses, so those are our selling and admin. They told me my operating expenses were 344,000. That will give me my profit or loss. And in this case, I have a loss of 14,000. So if I just work backwards, I'm just going to work up this way, I can actually get these missing numbers. So if you take 14,000 and minus it from 344, you'll end up with a margin of 330. So remember, do the math backwards and then do it downwards again just to double check. So if I take 330 minus 344, it does in fact equal 14,000. And now I can take the difference. So if my net sales are 600 and if I minus my gross profit of 330, that means my cost of goods sold has to be 270,000. So then again, do the math downwards again. 600 minus 270 does in fact equal 330,000. So then I know my gross profit percentage is my gross profit, 330, divided by your net sales of 600,000. And that gives me, I'm going to grab my calculator, 330,000 divided by 600,000. That gives me 0.55, and if you multiply that by 100, that means it's 55% exactly. So since it tells me to put everything to 2 decimal places, that's what I'll do. I'll do 55.00. And I'm done all the components. So remember, in this question, there's actually 3 tasks they wanted me to do. Post the adjusting journal entries, so then I'd get the adjusted trial balance, put together the multiple step income statement, and then run your gross profit margins for this year and last year.